and here we go. All right, welcome back to everybody watching the video. Remember that if you are catching this later on a rerun, that's perfectly fine, because the information I try to give is not time sensitive at all. The only things that I'm trying to focus on is show how you can make your own technical analysis, how I go through my whole routine of analyzing the whole situation, and then you can learn from this and do this for yourself. That's the idea. Of course, I would rather have you look at the live stream, because it would be nice to have a little bit more of a conversation going. Yesterday was really nice, and you know, this could also help you if you have any kinds of questions. I would be really happy to answer them on the live stream, because yeah, sometimes we go into very technical stuff, and you know, it's fairly obvious that if you are still in your rookie shoes, that you don't know everything, or you don't know exactly how to use the proper indications in their respective proper way. And this is what this channel is all about: spreading some knowledge, giving some back to the community, just like I received a lot. And it's from these kinds of streams and stuff that I learned most things that I know. Does that make me the best trader in the world? Absolutely not, but I'm fairly confident that I'm able to play the market and to spot some of the key elements that are required for setting up your trades. Of course, you know, you have to adjust your strategies to your knowledge, because just knowing stuff is not enough. It's seeing things happen, finding signals, and then knowing exactly how you want to set up, and also being patient. This is one virtue that I cannot teach you. You're going to have to work on this for yourself, but this is also one of the most important traits that a trader needs to have. And this comes only by experience. This comes only by doing this stuff. And you know, if you still feel not comfortable trading, then I would only suggest starting with a small portfolio, not taking too big a chunks. Also, keeping your leverage low. If you are trading on a leverage account such as Bybit, don't go balls out, because this is when you explode like a bad rocket taking off, right? And this is not what we try to do. What we try to do is build something on the long run, so that we can create a future for ourselves, right? And what better opportunity than such a volatile market that just trades 24/7. This is why I don't do stock. This is why I don't do all the other kinds of investments and stuff. I'm not lazy. I'm putting in the work, and this is what I'm expecting from the people viewing my videos as well. All right, so now that I've put all this out of the way, let's dive right in. Let's have a look and see what kind of shenanigans are present, and what we should be preparing ourselves for the coming day. Well, first of all, like I said yesterday, this blue box area was a nice area as a reference, as a key reference, because as long as we are closing within this blue box, this initiates some potential bullish divergences that could push the price back up. This time around, we did not really close within the blue box. So is this still possible? Basically, yeah, we could see a little bit more trending and finding a nice support area from here. Is it possible to break down? Of course, this is also possible, and this is why we draw the box, because once we start closing outside of the box, a little push up could happen, could be possible, but this is where I would not be expecting a real recovery. There are some key areas that we marked off yesterday. Probably things have changed over the past 24 hours. So we just need to readjust our assessment, reassess our situation, and this is what we're going to do right now. All right. So let's dive right in. First thing we want to be looking at, and this was very interesting. I found yesterday, 2 days ago already, we drew this trend line here at the bottom. And as we can see, price actually on the 1 hour chart did respect this line pretty much to the T. So this is already a very good indication. So I'm just going to extend this line a little bit more. And remember, this is not a frontier or a barrier that is unable to break. This is just a line in the sand. If price or if the indicator starts to move outside of the range, it just means that the assessment was wrong, and we need to be very nimble, very quick to be able to adjust to this situation. This is why I always keep repeating, think about your strategies. Think in both ways and try to build up some contingencies. Be patient for price to hit your target, and when it does, or when it starts closing into your target, then make sure that you reassessed the entire situation, that your estimation about what is gonna happen when it hits the target is still correct. Yeah, all right. So first things first, the downside. Let's see if our marks for the downside are still valid. We're gonna start with the 1 hour chart, and then we're just gonna move right up to the 3 hour, 4 hour, and 10 hour charts. And why do I take those time frames? Because the 3 hour and the 4 hour close at different intervals. The 12 hour is just an extension of the 3 hour and the 4 hour, so I don't find it really that relevant. But I do like to look at the 10 hour chart because this has the strangest intervals of closing. Maybe I just think about this. Maybe it would be a good idea to add a 5 hour chart, because the 10 hour chart is rather a long-term indication. Maybe a 5 hour chart would be a good idea. So you know what? Let's just do that. Let's just add a what did I just do? Um, Hours. Let's go to 5 and let's hit the add button. There we go. All right. Beautiful, beautiful, beautiful. All right. Now let's do this. And yeah, the 5 hour chart is going to be something new. Let's explore this together, right? Wait, let me just overview the different streams. I will be looking from time to time. Look, on Twitch, I keep getting those messages about, hey, you want to be famous? No, I do not. I thank you very much. And I would like these offers to be, just stopped. This is not what I'm up for. I don't need any fake views, any fake subscribers and stuff. I would just like to keep doing what I'm doing, and the people who are actually really interested, then you're very welcome to join me. All the others, I don't need a fake facade. All right. So here, let's dive in. Let's do this. Enough of the chit chat. So what are we going to do? We're going to have a look at these levels here and these levels here. We're going to compare these levels both to what RSI and price should be doing in order to break either this level or to not break this level and get a lower low on the price. So actually staying in between these two areas when the RSI pulls back would actually be a really nice signal for me. I would love to see that. So let's do a little measurement and let's see which price action should be expected. So let's go with the highest one of the two. I'm going to zoom this in a little bit so we see much better what we're doing. And so first one, would be this throat, this little push down here. Why am I not taking this one? Just because it already got broken from this situation here, the little tiny minuscule bullish divergence that we see here. So I would rather go with this one because this is the local low that I want to measure. So let's see, 36.66, and we're going to use PIG's reverse indicator. If you don't know where to find it, just type away in the comments, let me know, then I will show you, or I will tell you how to find it. It's one of my favorite indicators to be using. Now let's see, so this low comes together with 16,612. So maybe I can mark it off just for now. And so 16,612, 16,600. After that, we're just going to go over the other time frames, and we're going to take kind of an average and see where this leaves us. You know, I'm not gonna, I will try to clean up the chart later once we're done. Now the local low here, let's go with this section here, because this one here, this spike here down here, I don't think we're gonna see this get broken. Maybe we can measure it out, but I don't think this has changed a lot. Maybe we can call this the really critical zone. If we see price break this, then we know that we're up for a longer continuation. But let's go with this area here, this little zigzaggy thing, because that's the low that we've put in right here. Now, the lowest area should be let's go with 28, just a little average. And why do I not take all this really literally to the decimals? Just because it doesn't really matter all that much. It's an average that I like to take, just a guess, an estimation, and as price is moving, those numbers are going to fluctuate anyway. So it doesn't really matter that it's not actually perfectly measured out, just a little bit more of an estimation so we know what to be looking for. So 20, no, like this, voila. So 16,120 to the downside and 16,600 something to the upside. So basically, on the 1 hour chart, finding some support within this area would really be very positive. Let's measure out the lowest area just to see how far the 1 hour chart could reach before we really have to give up our bias. So 15.15. Let's have a look. That would be 14,365. Let's move over. Let's get this up. 14,360 something. Yeah, good enough. That's good enough for me. I hope this is also good enough for you. All right, are we going to look at the upside? Basically, the upside is still being defended by all these areas here, so I don't think that we will see a straight shooting up. There's gonna be bounces along the way. Yeah, let's just have a look and see where price could be getting in trouble. Right now, keep in mind that we do already have a potential potential bearish divergence between this, oh, scratch that, sorry, my bad, not this one, between those 2 points. You see lower high, higher high on the RSI. So yeah, right now, based on these assumptions, this is a potential bearish divergence on the short term. So based on this read already, I can tell you that I am expecting at least a little bit more of a pullback and maybe now finding support in one of the stronger areas, which would be a good thing. Like I said yesterday, I was expecting a lot more ranging. So yeah, this is this still falls within the plan that we are expecting. So let's look at the upside. Let's go with 63. Okay, so first key area of problems would be 17,300, 17,400, let's call it. So basically the top of those 2 highs, which kind of makes sense. Later I'm going to show you why, but first let's mark off those reads and let's see where we go from there. Okay. Now the ultimate high could be this section here, and this is at 78.1. 78.1. This would be 18,253. So let's draw this down. Let's put it here. 250. See, like not even a few seconds and it already changed. So keep in mind that those calculations are very, very much influenced by how price is changing. This is just a read of this price level and where we could encounter the indicated RSI level. But as things change, and especially as time passes, these reads are going to change. So this is why you need to do this as often as possible. Really reassess your situation all the time, over and over again. So okay, we do have our lines in the sand being drawn here. Let's move over to the 3-hour charts, the 4-hour charts. Let's do that same thing. It's going to be a lot faster because, as you can see, we don't really have a local low being set here. Yeah. So let's just go with the same areas. Let's try to make a little bit of a guesstimation. 21, 24. Let's go with 23. 15,400, so that still lines up with this bottom here. Okay, so let's do this. 15,400, close enough. Let's go with this area. It's 31. Now I know this looks tedious, and if you are not one that likes to to engage in all of these minute little things, then maybe trading is not for you, because this is really the stuff you need to be taking care of. Really take your time to reassess every situation time after time again. Now here, 16. Let's go with 300. Taking kind of sort of an average here. Okay. Okay. Okay, it's starting to shape up a little bit. Go with 63 again and 73. So to the upside, we got 63 sitting at 18,000. First line of resistance here, which is already a little bit lower than this one. So you see that the different time frames can have different reads, and this is why we're gonna have to start averaging a little bit more, so that these things either agree or that we are not overestimating ourselves. So the low edge for the 3-hour chart would be at 19,000. Now, how are we going to read this? So basically, in order to not have a bearish divergence, we need to get above the night, in between the 19,000 and the top of this structure. Could be a bad signal, a problem area. So let's do it like this. And then this one here, this was sitting at 18,000. So let's draw this all the way down to, wait, let me recalculate this. So 63, yeah, 18,000. Okay, so why did I do this? Basically, once we are within this blue box area, we're either going to create a bearish divergence with this low or this low. And the only thing, since the reads are lower than the highest high, are the only way to not have a bearish divergence tells us that if RSI is popping up to make a higher high, we need price also to be making a higher high. Yeah, does that make sense? So we can set this blue box like this. I think this is a very nice read. Probably we can also remove this line already, because it is within the blue box area. This one as well. There we go. No, let's not mess this whole thing up with too many lines, because you know, we don't want to be way more confusing than is necessary. Now, closing a 1 hour under this would close a 3 hour under this anyway, so we can leave this as it is. Yeah, we're starting to shape up. Okay, let's do the same thing for the 4-hour chart. This is gonna be a little bit easier, I think. 29, 23, 23. Yeah, I should be knowing these by heart now because it's always the same areas we're looking for. So 29 is 15,900. So that would be sitting here. 23.23 is 15,000. That would be sitting right here. So yeah, again, basically same story. We can draw this a little bit lower, breaking the red line. Obviously, this is the point of no return. This is where we are really going to start seeing lower lows, a series of more lower lows and lower highs before price is actually going to recover, maybe finding some support here and then go up again. Chances are, but the most important thing now on the short term is that this red line is respected, that we do not break below the red line. Let's look at the 5-hour chart because this is rather new for me. Oh, no. Let's look at the upside on the 4-hour chart first. Let's be as thorough as possible. And I'm just going to take this read here because this is the one we want to see broken. All the rest, you know, we can build up from there, but not being able to break either these two would be a problem situation. So I'm talking about this one and this one here. So let's have a look. We do have 63 and 69, 65. So let's do that. 63. 18,400 for this one. Looks reasonable. It is within the blue box area. And 69, 65 and 19,200 looks very reasonable as well. Breaking this area, same thing. We are gonna have to pop above and close above the blue box for this not to be a resistance area pushing the price back down. Now, how far can the price go down? Once we are here, there are levels of support that that can hold price and then initiate more of an upturn. But what we want to see to confirm this is not only that price just bounces, we want to see a continuation on the RSI. Maybe even, and this would be the best signal we can get, see price dip down, and as this happens, create a bullish divergence, and this would really be the strongest signal we can expect. But for now, this is just a weekend, low volume, and you know, usually over the weekend, it's more indicative to the tendency is more to be ranging and to be stuck within a range rather than really break out, unless we really had some super bullish or bearish things happening, and that the weekend just continues to break down, and then sometimes it gets compounded even that there is not enough support or resistance to hold the price back. So yeah, weekend shenanigans. It's very difficult to estimate what's happening over the weekend, so be very careful and keep thinking about your levels. Keep thinking about your ranges. Now, finally, the 5-hour chart. Let's do that whole thingy again, and then we're just going to try to clean up the chart a little bit so we have our averages. Of course, the higher time frames do have a lot more weight than the lower time frames. Like here on the 5-hour chart, I'm just gonna read this this bottom here because I think this is the only one that is actually interesting to measure. Let's have a look at RSI level 26. So this would be 15,240. Oh, 15,240. Yes. So, what do you know? Let's go with 250, just like that. All right, so look, this actually starts to make a lot of sense. Looking at the volume profile, this blue box is actually this whole node of volume. It does make a lot of sense that this area here could form a lot of support, and as it does, we are not going to make a lower low on the RSI. This would be a very nice bullish divergence where we could start forming our new structure upon. Does that mean we're going to see the price pop up in one go? I don't really think so, but let's move over to the 1-hour chart because this is going to be easier. What we can see right now already, is, wait up, I need to make this a little more clean. What we can see right now is already maybe some sort of a parallel channel forming. Okay, does that make sense? So if we are to respect this channel, coming down here puts us into the potential bullish divergence situation that we are talking about. And as we know, those downward sloped channels are easier to break to the upside. Then resistance becomes support, and we do see a new attempt to be pushing to the upside. But yeah, for now, I think playing this range, this channel for the weekend, I think this is the more possible play at hand. Now, on the other hand, and I'm going to be messing up my chart now, we also could argue that we are sitting within a wedge. Now, wedges are difficult to judge because they could either break to the upside or break to the downside. Of course, breaking to the upside, not very difficult. You know, we could find something like this, or we could run into trouble here and start going down. Then we need to look for a new shape, a new trend that emerges from this situation. Or if it breaks down, then we just forget about this wedge and we just go back to the idea of the channel. So very easy to set up your tactics from here. What you could do is either wait for this structure to be confirmed or not. If it breaks up, probably there's not going to be enough momentum, and we will see price come down again. Look for some support in either one of these lower regions. Or if price starts to break out of the wedge to the downside, then we also know which area to be looking for in order to look for support. And if this confirms, if it confirms also on the RSI reads and on the stochastics and stuff, then you know that it's also a good area to start thinking about a long position, because we are going to hit really close to the point of no return. And you know, this is a very easy way to set up your stop losses. All right, so yeah, I think I'm gonna leave it with this for today. I think we have enough of a picture to be working off of. It's weekend, so we can have a quick look at the close of the dollar. The dollar did make its move to the downside. Now, yeah, it's just a matter of are we going to be printing a lower low? Are we going to be printing a lower low both on RSI and price? Then yeah, continuation. We are just gonna go see more lows. And honestly, if I can be honest about this, I think we're basically there. I don't think, you know, it would take a lot for well, you know, splitting hairs, but this is already a lower low. Basically, this whole structure speaks a lot of about continuation to the downside, if you ask me. Of course, you know, we need to go level by level. We need to reassess our situations all the time. The biggest one is actually this here and this here. You know, strong bearish divergence, and I don't think such a strong read already played out. I think, and of course, don't quote me on this. Do your own due diligence, do your own technical analysis every time you look at it again and again. But looking from this, I'm under the impression that that the downtrend has only started. I think we could easily see the low 90s pop up, maybe the high 80s, but yeah, I could be wrong. Yeah, dollar is not looking really good for now, if you ask me. Yeah, E-mini futures, E-mini futures. Basically, same thing as yesterday. Still, nothing has changed. We do see our local series of higher highs. We do see higher high compared to this area. And what do we get on the RSI? Lower highs. So E-mini futures still expecting a correction to this downside. And this is interesting, you know. Usually people, let me phrase this correctly. In the past months, since March, especially since March, E-mini futures, the traditional markets, and the dollars had a strong correlation between price action and Bitcoin as well. So Bitcoin was also really closely correlated to what was happening on the markets, and inverse correlated to what was happening with the dollar. The dollar makes a lot of sense because the markets and Bitcoin are usually traded against the dollar. So dollar goes down, Bitcoin goes up. But this correlation is not a rule. Yeah, this is not something to start building your trades off. Why I do this, I keep looking at these again to re-evaluate the correlation, because those markets being correlated or decoupling from each other can be an indicator of a changing in sentiment. Imagine that all the people who used to be looking at Bitcoin are starting to move over to the traditional markets, you're going to start seeing a decoupling, and vice versa. If now people looking at Bitcoin are starting to, people looking at the traditional markets are starting to find more interest into putting money in Bitcoin and cryptocurrencies, again, we're going to start seeing a decoupling of these two markets. So I find it really interesting to keep my eyes on these things, because one very intelligent person said, show me the charts and I will tell you the news. And this is actually where reality, where the truth is hidden. This is where you can see what is really, really, really happening in the world. Yeah, so I do believe that that E-mini futures is still waiting for a stronger correction to the downside. So yeah, very, very interesting stuff to be expecting for next week. And yeah, let's follow it up and let's see what happens. Now I'm gonna leave it for today with this little note. I hope you guys enjoyed the stream. Remember, if you want to watch my videos live, 12:30 UTC every day, I will be here streaming my technical analysis, giving you my 5 cents, and hoping that we can all grow in this market together. Also, remember, there is a nice opportunity to join me in our adventure. I'm running my own Discord. If you'd like to join, become an affiliate, use my affiliate link on the website Wolves of Bybit. You just zap over to the website, scroll down, use the sign up button here. This is the affiliate link, and send me an email with your desired nickname, the email address you used to sign up, and maybe the user ID from Bybit itself, so I can acknowledge you on the platform. Now, why do I do this? Like this, I know only real active traders are going to be present in the Discord channel. Of course, it gives me a little bit of a kickback. It gives you the bonuses and a lot of amazing perks, but the kickback is not actually such a bad thing, because I will be giving back to the group. I have a little ad popping around on YouTube. I don't know if you've seen this, but until 10 people are in the group, I will be giving 15% of the affiliate revenue to the most active trader. Until 50 people, between 50 and 10, I will be sharing 30% of the affiliate revenue to the 3 most active traders. And until 200, I'm not going to go beyond this because this is already a ginormous number, I will be sharing half of the affiliate revenue with the 10 most active traders. Okay, so this is going to motivate people in the group, to motivate each other, to help each other, because making better trades make you more comfortable, and this is how more trades will happen. This is how the group, I hope, could start seeing a growth. And you know, this is what I want. I want to build a family that helps each other out. And if you know this is not enough, the motivation behind it would be that it's better for everyone, and it's also better for yourself. Okay, so I'm gonna leave it on this note. I thank you very much for watching. Have a good one. Enjoy the weekend. Keep your position safe like always, and I will see you tomorrow. Same time, same channel. Be there and be square. Bye bye, guys.